Hey, what's up, everybody? Gold and silver is a bloody mess today for the same bloody reason. And to be honest, I just came back not too long ago from the grocery store, and a couple of days ago, I had to go out to a restaurant, and I did not need this CPI data to tell me that inflation was still running hot, although they're telling me it's just slightly warmer than expected. We're going to get into that on this video today. Please consider hitting that thumbs up button on the video, and do let me know your thoughts, your opinions in that comment section below. Gold and silver is really not down all that much today, but they are still in the red. And to be honest, gold and silver, gold especially, but both, has had quite a run over the last week and a half, 2 weeks. Gold hit multiple all-time highs, but as I'm recording this video, silver is currently down 1.39%, or down 34 cents to $24.09. Gold is down 1.16%, or down $25.30 to $2,156.50. Just in case at least one or two people actually care who's watching this video today, Bitcoin is also in the red. In fact, a lot of cryptocurrencies that I'm looking at is in the red today, but Bitcoin also hit multiple all-time highs, I do believe, and Bitcoin is currently down 1.34% to $71,224.79. Gold and silver really had a nice run, especially after Jerome Powell testified in front of a House committee, where the markets looked at his testimony as being very dovish, and the markets do what the markets have been doing for about the last year or so, and thinking that Jerome Powell is going to start that pivot or start to lower interest rates or start easing sooner than later. But every time the markets and gold and silver have a nice run up because they think Jerome Powell is gonna start that pivot very soon, then you get the CPI smackdown because inflation is still running hotter than expected. But my question for all of you is anybody really surprised? Somebody sent me a text the other day with a little meme. It was about a beefy, cheesy burrito, I think it was from Taco Bell, how that same burrito in 2010 was 89 cents. And today in 2024, that beefy, cheesy, beanie burrito, whatever it was, is almost $6. And then it said in print, I wonder if this inflation data is included in those CPI reports. Highly doubtful. So I thought that was kind of cute, a little funny and sad all at the same time. But looking at the CME Fed Watch tool for the month of March. Now this meeting, the FOMC meeting, will be starting as I'm recording this video according to the CME Fed Watch tool in 7 days, 21 hours, and 34 minutes. And a couple of days ago, when I was looking at this tool, it was showing that there was a 97% chance that rates for the March meeting will remain unchanged. Well, today that has changed to 99%. And by the way, the date for when Jerome Powell will be making that announcement about the federal funds interest rate, I have referenced this a number of times in the last couple of weeks on my videos, but that will be March the 20th, 2024. And like I said, that is about 7 days away. Now, I'd like to reference an article on Kitco News by Jim Wyckoff, Gold and silver prices are lower near midday Tuesday in the aftermath. A key U.S. inflation report came in just a bit warmer than market expectations and prompted some profit taking. Now, I wonder how long it's going to be until that CPI data is revised and it comes in later, much hotter than expected. I don't know. I'm just asking the question. Gold, April gold, was last down $21.20 at $2,167.70. May silver was last down 0.285 at $24.43. The U.S. data point of the week saw the consumer price index for February come in just a bit warmer than expected, up 3.2% year on year versus the market expectations for a rise of 3.1% and compares to a rise of 3.1% seen in the January report. The core CPI number for February was up 3.8% compared to the expectations up 3.7% and up 3.9% seen in the January report. The slightly warmer CPI readings boosted the U.S. dollar index a bit while U.S. Treasury yields upticked. Let's take a look and see what the dollar is at as I am recording this video. The USD, the dollar index, the DXY is up 0.07% up to 102.94. Back to the article. JP Morgan chief Jamie Dimon, oh, that's everybody's favorite, Jamie Dimon, said overnight the Federal Reserve should wait until after June to lower interest rates. Very interesting. Dimon, visiting Australia, also told a group that the U.S. stock market could be in a bubble phase. I wonder how long before that hits the mainstream media. Adding to be extra cautious when an investment group looks so obvious. Asian and European stock markets were mixed in overnight trading. U.S. stock index futures are solidly higher near midday. The bulls market run in U.S. equities is a negative for the precious metals from the perspective of a competing asset class. The key outside markets today sees the U.S. dollar index modestly up. Crude oil prices are firmer and trading around $78.50 a barrel. The yield on the benchmark 10-year U.S. Treasury note is presently fetching 4.149%. May silver futures price scored a bearish outside day, down today after hitting a 9-week high early on. The silver bulls still have the overall near-term technical advantage. Silver bulls' next upside price objective is closing prices above solid technical resistance at $26. The next downside price objective for the bears is closing prices below solid support at $23. First resistance is seen at today's high of $24.90 and then at $25. Next support is seen at today's low of $24.22 and then at $24. Wyckoff's marketing rating 6.5. May, New York copper closed down 75 points at 392.10 cents today. Prices closed near mid-range and hit a 5-week high today. The copper bulls have the firm overall near-term technical advantage. Prices are in a 4-week-old uptrend on the daily bar charts. Copper Bull's next upside price objective is pushing and closing prices above solid technical resistance at the December high of 388.80 cents. And the next downside price objective for the bears is closing prices below solid technical support at the February low of 367.95 cents. First resistance is seen at today's high of 395.20 cents, and then at the January high of 396.75 cents. First support is seen at this week's low of 387.85 cents, and then at the last week's low of 383.70 cents. Wyckoff's marketing rating 7.0, just in case anybody cares about copper. I do love stacking those copper Lincoln cents, and by the way, have a pretty decent size hoard of them. How about you? Are you stacking copper Lincoln cents for its face value? I do appreciate everybody for taking time out of your day to watch this video. Please do let me know your thoughts, your opinions in that comment section below. And what is your thoughts about JP Morgan and Jamie Dimon saying that the stock market may be in a bubble phase? Thanks everybody for watching. Like, comment, subscribe, share, and I'll talk to everybody on my next video. Thanks a lot, everyone.